Good morning, students. The idea was basically for today to be a question and answer session. So if there are any question in the question bank or any of the examples in the notes that you are uncertain of or any examples from your textbook, then you are welcome to raise it and then we can discuss it. However, just before we go to our question and answer part, I have gone through most of the tests, and it seems to be that the two most common areas. First of all, before I go there, I have to compliment you all. You did extremely well in the class test last week, Friday. So the marks are looking very good, and if you can keep that up for next Monday's formal test, I think you are well away. Anyway, there seems to be two areas that tends to lead to a little bit of uncertainty. The one is how to determine the purchase price of a property, plant, and equipment item during an asset exchange. So tomorrow we are going to address another asset exchange. And then the other one seems to be the allocation of directly attributable costs over the purchase price of the various significant parts. So I'm going to refer back to question 4 a little bit later, but before we do that, let us look at question 6. So question 6 from your question bank, the one that has the company title Ancient Waters. So perhaps you can open that up. Maybe I can make this even more, a little bigger. That seems to be nice and big now. Okay, so let us work our way through this question, ladies and gentlemen, because this also has to do with the allocation of directly attributable cost over the purchase price of significant parts. It also provides us with depreciation calculations and an impairment test. So it is not a long question, but it's quite a comprehensive question. So let us first of all see what is required of us. They've given us a table. A blank table on the next page, but that will obviously now be online. And then they say calculate the cost to be capitalized to the asset account. And the asset we can now see is a bottling plant. So they are obviously bottling, looks like spring water. Then calculate the depreciable amount. We know that we've got to calculate the depreciable amount before we can actually calculate the depreciation expense itself. Calculate the depreciation for the year ended 31st of December 2006. 1.4, calculate the carrying amount of the asset at that date, and then test whether the asset should be impaired. In other words, should we write off an impairment loss at the end of December 2006 if the value in use is 4,800 rands and the fair value less cost to sell is 3,200 rands. Sorry, 3,200,000. So 4,800,000 rands. That is the value in use, and the fair value less cost to sell is 3,200,000. So obviously we have to know which one of those two figures we can use, or we should use, or we are allowed to use as our recoverable amount. But we'll get to that a little bit later. Now let us go and look at the body of the question itself. They say there we can ignore that, which makes it a little bit easier. And then it carries on. Ancient Waters Limited is a company involved in bottling spring water. The company purchased a bottling plant on the 2nd of January 2006. The plant, so that is the purchase date, the date of acquisition. The plant is made up of three significant components with the following cost. So we've got a component there, the engine, an engine component with a cost of 1,500,000 rands. We see that it has an expected useful life, that engine on its own, of 5 years, which means we'll have to go and capitalize it in a separate general ledger account. And it's got a residual value of 500,000 rands estimated at the end of its useful lifetime. Then that plant has got a conveyor belt and fittings with a cost of 600,000, and it has an expected useful life of 3 years. No residual value. And then the outer structure of this plant has got a cost of 2,200,000 rands. It's got an estimated useful lifetime of 8 years, and it's got a residual value of 400,000 rands. Now, ladies and gentlemen, looking at those facts and figures, if you think about the requirements for something to be recognized as a significant part, do you think those three components, this is just a yes or no question, do you think those three components should be capitalized in separate ledger accounts? In other words, should we have a cost account for each of them separately? And this is not a trick question like the one last week. Thank you for that answer, Enrique. Right, ladies and gentlemen, let's look at our little checklist. We had a little checklist that we drew up a couple of weeks ago with three items. The first thing is um, the individual cost of each component. Is that significant in its own? The one is 1.5 million, the other one is 600,000, and the other is 2.2 million. So let us start with that first little box. Does it tick the first box? Are those amounts significant on their own? What would you say? Those amounts are significant in relation. Thank you very much, Enrique. Thank you, Llewellyn. Sorry, I've just got to clean my screen a little bit there. Yes, okay, so you agree. So it does tick that box. Now, the second box that we've got to tick, ladies and gentlemen, can those components be separately replaced? Can we take out the engine and put in a new engine? Can we get rid of the conveyor belt and install a new conveyor belt? Again, the answer is yes. Same with the outer structure, right? So they can be replaced separately. And then a crucial question for us, do they have different expected useful lifetimes? Yes or no? Do they have different expected useful lifetimes? Yes, thank you, Enrique. Exactly. Right. So they have got so it ticks all three boxes to qualify as to be accounted for as significant parts. So therefore, we are actually going to have a cost account for each separate component because they do qualify in terms of IAS 16 as significant parts. So that we must now remember that we'll have an account called what is it again? Bottling plant. We'll have an account called bottling plant, uh, engine cost. Right. So that is going to be our first cost account. It's going to be called bottling plant or something similar. Yeah, it's called a bottling plant. Bottling plant colon engine colon cost, and then we're going to have another account that carries the 600,000 rands, which we are going to call bottling plant colon conveyor belt and fittings colon cost. And then we're going to have a third account that carries the 2.2 million, which we are going to call bottling plant colon outer structure colon cost. And the same will happen with our accumulated depreciation accounts, ladies and gentlemen. Not the expense, not the depreciation expense. There we only have a depreciation expense on the bottling plant itself because we are going to write that expense off at the end of the year to our profit and loss account, right? But when it comes to the accumulated depreciation, where we are going to be carrying forward the balances for 5 years in the case of the engine, for 3 years in the case of the conveyor belt and fittings, for 8 years in the case of the outer structure, they will have to have a separate account for each component that carries its accumulated depreciation. Right. So all in all, we're going to have 6 accounts that will be dealing with this particular bottling plant. Right. Now, ladies and gentlemen, what they also tell us is that other costs incurred in relation to the bottling plant are as follows. So we've got some more costs here. So we must now go and decide. We've got to go and identify for each one of them whether it should be written off as an expense to our statement of profit or loss, or should it be capitalized as part of the cost of the asset. That is now what we'll have to go and decide. But before we decide that, let us just look at our additional information as well. They say the financial year end of the company is the 31st of December of each year. The company uses the straight line method to depreciate its plant, this bottling plant. The bottling plant was made available for use, or it became available for use on the 1st of February 2006, but production actually began on the 1st of March 2006. So we've got now 3 dates. We've got the acquisition date, we've got the date when it became available, and we've got the date when production actually began. So we'll have to take a decision later on when we are going to calculate depreciation, from which date are we going to calculate the depreciation. Then, ladies and gentlemen, they say all other costs all those costs that qualify as directly attributable costs are incurred evenly or equally between the 3 significant components of the bottling part. Now, ladies and gentlemen, you may remember in question 4, which you have the solution for, they said that the cost must be allocated proportionally. So later on, when we are done with question 6, we are just going to go back to question 4 just to look at how the proportionate allocation worked. But in this case, it is allocated evenly or equally between the 3 significant parts. Okay, so now we can start compiling our little table. So clearly, first of all, we know that the purchase price forms part of the cost. So in the case of the engine, that is 1.5 million. So we can already go and put that in there. The purchase price of the engine, 1.5 million, right? I'll post this document to Blackboard with a recording so that you have the solution as well. Then in the case of the conveyor belt and fittings, we know that the 600,000 rands purchase price will form part of the cost. So we can already put in, I don't want to scroll down so far now. I'm not going to hide that a little bit up. So we now can see that the 600,000 rands purchase price is also going to be capitalized, but in a separate ledger account. And then we've got the purchase price of the outer structure of 2.2 million rands. So clearly that 2.2 million rands must also be capitalized in a separate ledger account, which we will call bottling plant, outer structure, cost, the 2.2 million. But now we've got those possible directly attributable costs that we must now go and see. Are we going to write them off as an expense, or are we going to capitalize them as part of the cost of the asset? So let us go through them one by one. First of all, ladies and gentlemen, they say on the 5th of January 2006, we had these expenses. Now they are actually 2 different expenses, but they've paid for it, let's say in one go. Delivery and installation of 600,000 rands, right? Delivery and installation, 600,000. Now, you remember we said a few weeks ago, when we decide whether this cost is directly attributable, which means it must be capitalized as part of the cost of the asset, or whether it's not a directly attributable cost, which then means it has to be written off as an expense, we have to ask ourselves a maximum of 3 questions, right? A minimum of 2 and a maximum of 3. So let us split that delivery and installation up into 2. The delivery part, ladies and gentlemen, where that plant was delivered to your factory. The first question we've got to ask, is it a necessary cost? You remember we said a directly attributable cost is a cost that is necessarily incurred in bringing the asset to a condition and location where it can be used as management intends. So, yes or no, is it a necessary cost? Just looking at the delivery, can we operate that plant in our factory if it's not in our factory? So, is it a necessary cost? Anyone? Yes, thank you, Enrique. The rest of you must also participate. Don't be shy. Right, it is a necessary cost. If that bottling plant has not been delivered to our factory, we cannot produce the bottles of water. Right, so it's a necessary cost. Now I'm going to ask these questions in such a way that every time we've got to ask all three questions. Does that delivery play a significant role in the condition of the plant? What would you say, yes or no? One could argue that it does. One can argue that it does, but I would rather say maybe not. Who knows? But now remember, there's a third question that we have to ask: does the delivery play a significant role in the location of that bottling plant, where it is? The fact that it's been moved, that it has been transported to our factory from wherever it was manufactured, that it has been transported to our factory where we can use it as management intends, does that play a significant role in the location of that bottling plant? And the answer is yes. Right, yes. So either way, we can see that the delivery is definitely going to be a directly attributable cost. Now, what about the installation? We might have to employ engineers or some specialists to install that bottling plant in our factory. So, again, we've got to ask, should that installation cost be capitalized or should it be written off? So, now if it has to be capitalized, it means it has to comply with the requirements to be a directly attributable cost. So, we are going to ask ourselves the question first, is it a necessary cost? And the answer is yes, it is. Right? It is a necessary cost. If the plant is not properly installed, again, then once again, you are not going to be able to produce those spring water bottles, right? You're not going to be able to produce a product. Then, ladies and gentlemen, we can ask, does the installation cost play a significant role in the location of that bottling plant? And there the answer is probably no, right? Because the delivery made a difference to the location, but the installation does not really make a difference to the location of the asset because once it's been delivered, it's already in our factory. But that is not the only question, the only subsequent question. Now we've also got to ask, does it play a significant role in the condition of the asset, which is a bottling plant? And there the answer is Yebo, thank you, Enrique. Yes, there we go. Okay, so in either case, the delivery as well as the installation cost, we now see that that qualifies as a directly attributable cost, so it needs to be capitalized as part of the cost of the asset, and it is a total cost of 600,000. So let us go and allocate that. So there we had the purchase price, ladies and gentlemen, of each separate component, the purchase price. Now we've got the 600,000 rands, one category of directly attributable cost, which is the delivery and installation. And that is a total amount of 600,000. Now, like I said earlier, once we're done with this question, we're just briefly going to go back to question 4, where the costs were proportionally allocated. But in this one, they specifically said that it is going to be equally or evenly allocated to the purchase price. Those are really your only two options, ladies and gentlemen. I can't think of any other option. You're either going to allocate it proportionally, in other words, the bigger the purchase price, the higher the cost you allocate to it, or you are going to allocate it evenly or equally, same thing, right? So when we allocate it evenly or equally, all you need to do, ladies and gentlemen, is see how many significant parts there are. And we now see there are three. There's the engine component, there's the conveyor belt and fittings component, there's the outer structure component. So there are three significant parts. So if we are going to allocate that 600,000 rands evenly over those three parts, simply means we have to uh, uh, divide that 600,000 rands by the three components. So we are going to allocate 200,000 rands to the engine component, 200,000 rands to the conveyor belt and fittings component, and 200,000 rands to the outer structure component. So each significant part is allocated the same amount. The same amount. So if there had been five significant parts, you would have divided the 600,000 rands by five. Right. So that is pretty straightforward. Like I say, later on, we're just going to look briefly again at proportional allocation. Then, ladies and gentlemen, the next cost that we have here is staff training. On the 16th of January 2006, staff training. So, ladies and gents, we've got to determine, as usual, is it a directly attributable cost that must be capitalized, or is it an expense that needs to be written off? So we go through that same process, ladies and gentlemen. So we have now trained our staff on how to operate that bottling plant. So the first question we ask ourselves, as always, is it a necessary cost? Is it a necessary cost? I would say yes, 50-50. Thank you, Enrique. I like that. It is probably necessary because otherwise, if the staff do not know how to operate the plant, you cannot produce your product. They might even damage the plant, right? Um, so it's probably a necessary cost. But now there's two subsequent questions is or are. The two subsequent questions are: does it play a significant role, the staff training, in the location of the asset itself? Yes or no? Does it the fact that you are training your staff? No, thank you, ZP. You are correct, right? It does not change the location where the bottling plant is at. But there's another subsequent question. Does it change the condition of the bottling plant itself? Yes or no? Again, no. Thank you, Enrique. Right. So you are correct, ladies and gentlemen. We always say tongue in cheek when we get to this kind of scenario. It might change the condition of the staff, right? Because they are now better trained. But that is not what the question is about. The question is about the plant itself, the asset, not the operators of the asset. Does it change the condition of the asset itself? No, it only changes the condition of the staff who are going to operate the asset, right? So the staff training then is not qualifying as a directly attributable cost, which means that we are going to write it off as an expense. So we are going to debit an expense account called staff training. All right, ladies and gentlemen, let's go to the next one. On the 19th, on the 19th of January, we did some testing to ensure that the plant is fully operational. By the way, if you have a look at the notes, where the notes that we've written where it discusses directly attributable cost, this one is actually specifically mentioned there. Why is it specifically mentioned there? It is one of the examples also used in IAS 16. So testing to ensure that the plant is fully operational. Now this one is a little bit more tricky, but let us work through it. Let us reason through it. If we are still testing, this is our first kind of question here. If we are still testing that bottling plant, do you think if we are still testing it that it is ready for use? Yes or no? If we are still experimenting, we're still testing, we're still trying to see. Thank you, Henrique, you spot on, right? So it means it is not ready for use yet. So we haven't taken a final decision that the plant is fully operational yet. We are still testing it, right? So that means the plant is not ready for use at that point in time. And as we've said a couple of weeks ago, as long as we are incurring costs, and the plant or whatever kind of asset we are incurring the cost on, if that asset is not ready for use yet, we continue capitalizing the cost that should be capitalized. In other words, directly attributable costs. It's only on the date when that asset is ready for use that two things happen. We stop capitalizing any further cost and we start our depreciation process on the date when it is ready and able to be used. Okay, ladies and gentlemen. So now, once we've determined that, I see I get a warning that my connection is a little bit poor. It comes and goes at the moment. I'm not sure why. I know there was some damage to an undersea cable that they are fixing. So, but hopefully you won't lose me. Anyway, uh, where were we? Okay, so now we've got to go and see whether it is a directly attributable cost. So, ladies and gentlemen, is it a necessary cost? That is our first question. Is it necessary to test it before we can use it? What would you say? Yes or no? Yes, thank you all. Thank you. Yes, it is necessary to test it. Otherwise, you don't know what is going to be produced. It could be empty bottles, or it could be bottles without caps, or it could be there could be oil leaking into the beautiful, pristine spring water and spoil it totally, right? So it is definitely a necessary cost. You don't know whether it's going to be producing those pristine bottles of spring water unless you've tested it. Now, ladies and gentlemen, does the testing play any significant role in the location of the bottling plant? Yes or no? No, thank you, Enrique. It doesn't change where it is at. But now we've got to think outside of the box. As long as they are testing it, every time that they find that something is not working, the caps are not being put on, or they being incorrectly put on, it's not waterproof, or empty bottles are being recorded, the water is not being deposited within the bottles. Each time they find that, they're going to tweak it a bit, right? So they're going to fix it, they're going to change it until such time as it works. So at any point in time where they're testing and something is not working right, they fix it, right? So therefore, we can ask that last subsequent question: does the testing play a significant part in the condition of that bottling plant? Yes, it does. Thank you, Enrique, and thank you for everyone that has been answering so far. Thank you so much. It does, ladies and gentlemen. So that means that 30,000 rands testing must be capitalized as a significant part. So let us go and see. It's 30,000 rands there. So we take our total down. There we've got the 30,000 rands total. Now, if we are going to allocate it evenly or equally, it is very straightforward. We simply go and see how many significant parts do we have, how many components have we identified that should be separately capitalized, or its cost must be separately capitalized. And we saw it's 1, 2, 3. Right. So now to allocate that evenly means we simply take our 30,000 rands and divide it by the number of components or significant parts, which is 3. So that 30,000 divided by 3 gives us 10,000 rands that we are going to allocate to the cost of the engine, 10,000 rands that we are going to allocate to the conveyor belt and fittings, and 10,000 rands that we are going to allocate to the outer structure cost. Right, ladies and gents. So that is quite straightforward. Once we've determined whether it's a directly attributable cost or not. Now let's go to the next one, ladies and gents. Launch party. So on the 21st of January 2006, we had a nice bash. We had a party. We celebrated this new plant. It's going to make our company more wealthy, and in turn, our salaries will be raised, hopefully. So we are very happy about this new venture. So we have a party. Right, ladies and gents. Now we've got to go and decide, should that cost of 150,000 rands, should that launch party cost be capitalized as part of the cost of the asset, or should it be written off as an expense? So let us go through our requirements for it to be a significant part again. First and foremost, we ask ourselves, is it a necessary cost? Can we do without it or not? Is it a necessary cost? What would you say? That is the correct answer. Thank you, Enrique. It is not a necessary cost, right? Without the party, that plant could still have carried on. Students sometimes pull my leg here, and they say, "Yeah, but the party is necessary." Okay, you have to celebrate it now. Okay, I know that is not correct. Enrique is correct that it is not necessary. But even if you decide, if you should be of the opinion that the launch party is a necessary cost, let's see if it then qualifies as a directly attributable cost. Now we've got to go and ask the two subsequent questions. Does that launch party play any role in the location of the asset? Yes or no? No, right? No, it does not play any part in the location of the plant. The plant is already there. It's already installed. We've tested it. So the launch party does not play a role in where that physical plant is at. Then we can then we must still ask that third question, ladies and gentlemen. Does that launch party play any role in the condition of the plant itself? Again, thank you, Enrique. There we go. Again, the answer is no. So even if you had been of the opinion that the launch party cost is necessary, the fact that it plays no role in either the condition or the location of the plant means that it cannot be seen as a directly attributable cost. So therefore, that 150,000 rands will be written off as an expense. Okay, and you know from financial accounting one that the value added tax, I know they said ignore that in this question, but when it comes to staff refreshments and launch parties and any kind of entertainment, the company is not allowed to claim input tax on entertainment or party or staff refreshments and so on. Just a matter of interest. And then lastly, we've got this initial operating loss. So what that means is in the first week or first month or maybe 2 months, let me see, it's March. So in the first month of using, actually producing this product, perhaps they haven't properly advertised it yet. Their marketing hasn't been so spot on. So in the first month, March 2006, they actually incurred a loss. So in other words, their expenses exceeded their income from selling those items. Now, should that be capitalized or should that be written off? Now, the question here is actually very, very different to any of the other questions. The question here is an initial operating loss, in other words, where you calculate your income from selling those bottles of water, minus your wages and minus your electricity and minus all your various expenses. So is that initial operating loss even a cost at all? Is it a cost? No, thank you, Enrique. It is not even a cost at all. Right. Let me just highlight we're not at the 150,000 anymore. So that is not a cost. That is the result of income less expenses, right? So it's not a cost. So we don't even have to go through the rest of our arguments because it's not a cost. It cannot be either written off as an expense, nor can it be capitalized as part of the cost of the asset. Right, so far so good, ladies and gentlemen. Let's just pause there. Have you got any questions so far? Now we are going to be starting with the depreciable amount and depreciation expense and so forth. Are we all on the same page still? Right. Looks like it. So now they say we've got to go and calculate the depreciable amount. So let us maybe just complete this 1.1. Calculate the cost to be capitalized to the asset account. That should actually be asset accounts. Well, the overall asset we know is a bottling plant, but we're going to have three accounts that will contain the cost of the three different components. So let us just complete that. So what is the total cost to be capitalized? That was the first one that was required of us, number 1.1. So we take the purchase price of 1.5 million. We add the two directly attributable costs, in other words, the delivery and installation of 200,000 plus the 10,000 rands testing. So that gives us total cost to be capitalized of 1,710,000 rands. Right. We do the same with the conveyor belt and fittings. The purchase price was 600,000. We add the two directly attributable costs, being first of all the delivery and installation of 200,000 and also the 10,000 rands for testing. So that means the total cost that is going to be on the account that we call bottling plant, conveyor belt and fittings cost is going to be 810,000 rands. Right. So we're going to allocate those accounts that we originally recorded as delivery and installation. We're going to now take it out of delivery and installation. We're going to credit that account and we're going to debit the account called bottling plant conveyor belt and fittings cost. Right, ladies and gentlemen, the same with the outer structure. Our purchase price was 2,200,000. We add the two directly attributable costs, the 200,000 rands for the delivery and installation, and the 10,000 rands for the testing. So that gives us a total cost in that account for the outer structure of 2,410,000 rands. Right. Now the next thing we've got to go and calculate is our depreciable amount. Let me just check that. Calculate the depreciable amount. Right. So when we have to calculate the depreciable amount, let me just move away from my answer there and ask you, when we have to calculate the depreciable amount, how do we do that? What is our depreciable amount? Let us first talk about it philosophically. Let's talk about it philosophically. Philosophically, your depreciable amount is the value of the asset that you are going to consume during its useful lifetime by using it. Right. That is what your depreciable amount actually represents. Okay, so it is the amount that you are going to consume as depreciation during the course of the useful lifetime. So if you can type for me there, maybe just you can use abbreviations if you wish. Thank you, Enrique. That is exactly what I was going to ask. There, you've got it right. So your depreciable amount is the cost of the asset, the total cost of that asset, or in this case, the significant part in its own, minus the, yes, what does that RV stand for, ladies and gentlemen? There we go. There we go. The residual value. So what we are saying here is, for instance, in the case of the engine, I know there was some additional cost. Maybe I should go down to the solution here. What we are saying there is that the total cost of the engine is 1,710,000 rands, but at the end of its useful life, this is what the residual value means for us. At the end of its useful life, once we are done with it, we estimate that we will be able to sell it for 500,000 rands, right? So if it costs us 1.71 million rands and we are going to be able to sell it for 500,000 at the end of the useful lifetime, what is the value that we are therefore going to consume during the course of the useful lifetime? The difference between those two, right? Let me just ask you, does that make sense? Because it's quite important that we understand the concept here. Does that make sense to you? Thank you, Enrique, and I hope the rest of you agree. Right. So that basically means we are going to consume during those 5 years that we are going to use it a value of 1,210,000 because we believe we are going to be able to get it for or to sell it for 500,000 at the end of the year. So there we go. Our second requirement is the depreciable amount. In the case of the engine, it's the cost minus the residual value, which gives us the depreciable amount of 1,210,000. In the case of the conveyor belt and fittings, we see we had a total cost of 810,000 rands. We saw a little bit earlier that this part has got no residual value. So once we have used it for 3 years, we will have to scrap it. We're not going to be able to sell it even for 1 rand, right? So it's going to be worthless to us. So that means, in turn, ladies and gentlemen, that whole cost is going to be consumed by us during the 3 years that we are going to be using it. And then our outer structure, it has a total cost of 2,410,000. We saw earlier, we can maybe just scroll up again. We saw there that the residual value is 400,000, which means that we believe that we will, at the end of that 8-year period where we have used it, that we will be able to sell it for 400,000 rands, right? That is what we aim for. That is what we believe. That is what we estimate we should be able to sell it for 400,000, which means in turn that the value that we are going to use up of that cost, the total value or the total cost that we are going to consume during the course of that 8-year period is going to be the difference between those two figures. So in other words, 2,010,000, right? 2,010,000 rands. Right, so far so good. Then, ladies and gentlemen, the next step is to go and calculate the depreciation expense, the depreciation expense itself. So here they say, where was it? Let us just now go and see from which date are we going to start our depreciation expense. Now, where did we have the year end there? So they say the financial year end of the company is the 31st of December each year. Now we've got we've got some other dates here as well, but we've got three significant dates that we've got to take into account. First of all, the date of the acquisition when we bought that bottling plant. So that's the 2nd of January 2006. That is one possible date. Then we also saw here in that second bullet, they say the bottling plant was made available for use on the 1st of February. What that really means, ladies and gentlemen, is that at that point in time, the 1st of February 2006, we were happy. We were happy that the bottling plant is ready to be used, right? It is working properly. We've tested it. Everything is A-OK. It is ready to go, man. Go. So everything is settled. But for some reason, we delayed our production. We actually only started our production from the 1st of March. And just to add insult to injury, we also incurred a little loss during that March, that month. Anyway, ladies and gentlemen, so my question now here, the 2nd of January, the 1st of February, or the 1st of March, when are we going to start our depreciation process? 1st of February. Thank you, Enrique. Thank you, Samila. Spot on, right? So as soon as it is ready to use, two things happen. I'm actually repeating what I said about half an hour ago. Two things happen. You stop the accumulation of costs. So when the plant or any other property, plant and equipment, once it is ready to be used, you stop accumulating any further cost. Any subsequent cost must then be written off. Okay. And secondly, on that same date where you stop capitalizing cost, you have to start the depreciation process. Whether you actually use it in the next month or not, the fact is that the method that we are using, which is the straight line method, is based on time. And that time starts on the day that you are that plant is ready to be used. The diminishing balance method is also a time based method of depreciation. So the same would apply to uh, 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 to the diminishing balance method. The only exception is if you are using the usage method or the sum of digits method. Now, as the name usage indicates, you are only going to depreciate it if you are using the usage method in those months that you actually use it. Right? So anytime that you either delay using it or if you for 2 or 3 months do not use it, then in the case of the usage method, your depreciation actually stops. But in the case of the straight line method, as well as the diminishing balance method, whether you carry on with this production or whether you pause it for a month or 2 months, the depreciation process just keeps on going. It keeps on depreciating. So there's no pause in the depreciation process because those two methods use a time based approach. So, ladies and gentlemen, now that we've determined that we are going to start our depreciation process on the 1st of February 2006, we've now got to go and see for how many months during the course of this year do we have to go and depreciate it? For how many months? 11 months. Thanks, Samila. Spot on 11 months. So for all months during the year except for January. So we start on the 1st of February. We can use our fingers if we want February, March, April, May, etc. until the end of December. We'll see it's for 11 months. Spot on. Right, now let's go and do our calculations, ladies and gentlemen. So now we've got to go and do 1.3. 1.3, our depreciation as at the 31st of December 2006. Now, let me give you a warning here. I know that students sometimes make a very common mistake, a mistake that is almost, I don't want to say one out of every two students, but many students, especially when you are a little bit anxious, then some students make this mistake. So if we now are going to look at the depreciable, the depreciation, which amount are we going to use, ladies and gentlemen? Are we going to use the purchase price as the basis? Are we going to use the cost as our basis for depreciation? Or are we going to use the depreciable amount? Which one of those three? It's not. This is not a trick question. The depreciable amount, right? The depreciable amount. Thank you for that answer. That is the whole point. Why we calculated the depreciable amount. The point was so that we can use it for our depreciation expense calculation. So now, ladies and gentlemen, we know that we have to use the depreciable amount to calculate the depreciation. There is another common error that I'll point out a little bit later when it comes to this kind of table. So we take our depreciable amount, 1,210,000. We divide it by 5. That gives us our annual depreciation. Maybe I'll do that. Let me just grab my own calculator here. So that's 1210000. Divide by 5, because they don't give us in the solution, they don't supply us with the annual depreciation. So we see the annual depreciation. If this had been for 12 months, if this had been for a full year, then our depreciation would have been 242,000, right? It would have been 242,000, but now we only had that asset available for use for 11 out of those 12 months. So what we have to do now is multiply by 11 and divide by 12. Multiply by 11, divide by 12. That gives us 221,833 rands and 33 cents. Right, so we'll just round it off to the nearest whole figure. So that is 221,833. All happy with that? Okay, so now let's go to the next major part, the conveyor belt and fittings. We saw that the depreciable amount, let us just highlight that again, the depreciable amount is 810,000. We also saw that the expected useful lifetime is 3 years. So what do we do, ladies and gentlemen? We first of all go and see what is our annual depreciation. Let me do that. 810,000. 810,000 divide by 3. So that gives us 270,000. So if this plant was available for the whole 12 months during the 2006 year, that would have meant that our depreciation would have been 270,000, but it's only available for 11 months. So we say multiply by 11, divide by 12. And that gives us 247,500. There we go, 247,500 rands. The same with the next component, the outer structure, ladies and gentlemen. We saw that the depreciable amount is 2,010,000. So let us go and tap that into 010,000. And our expected useful lifetime is 8 years, so we divide it by 8. So it means our annual depreciation would have been 251,250 rands, 251,250. But once again, we are not, this plant is not available for the full 12 months. We have to apportion our depreciation expense. So we multiply that by 11, divide by 12, gives us 230,312.50. Okay, 230,312.50. So like Enrique said earlier, this is a 50-50 call. I think most accountants would say if it's 50 cents or more, they'll round it up upwards. If it's 49 cents or less, they'll round it up downwards. But anyway, whether you calculate that as 230,312 or 230,313 is really not that important. But like I say, normally if it's 50 cents or more, we will round it up upwards. Anyway, so that gives us 230,313. Right, ladies and gentlemen, so far so good. So there's one more thing that we've got to go and do, or two actually, two things. We've got to go and calculate the carrying amount of the asset at the 31st of December 2006. Now, as I've said, there's another very common error that students very often do here, especially when they're a bit nervous, especially when they haven't practiced this kind of table too often. So, ladies and gentlemen, if we are now going to calculate the carrying amount, where do we start? We know we've got to go and deduct the accumulated depreciation, but what must we deduct it from? From that, let's highlight the three figures again: the 1.5 million, or the 1,710,000, or the 1,210,000. What is our cost? Remember, our this is very important because, like I say, students very often go wrong here. Our carrying amount. Our carrying amount is cost less accumulated depreciation, right? Cost less accumulated depreciation. So if we are now going to calculate the carrying amount, what do we use as our cost? Which figure? Which figure must we use? 1.71 million. Thank you, Enrique. Thank you, Sumila. Total cost capitalized. Thank you, student, with a number there. You are all correct. Right. So it is the 1.71 million. So we have to take the total cost that was capitalized, as Samila also said there, of 1.7 million. We only add this one depreciation for the first year, so that also equals our accumulated depreciation, which means that the cost of 1,710,000 less the accumulated depreciation of 221,883 gives us a carrying amount in the case of the engine component, of 1,488,167. Right, so now you know that trick. You will never make that mistake. I don't think any one of you have, but if you had, you won't make it again, right? So our total cost to be capitalized in the case of the conveyor belt and fittings component was 810,000. We can indicate it there. We've brought it down there, and we know that we've only had this first year of depreciation, so our accumulated depreciation will still be the same, 247,500, which means that our carrying amount is 562,500. And then lastly, our outer structure, the total cost to be capitalized was 2,410,000, so we carried it down in our reconciliation. So there's the cost, the total cost of 2,410,000. The accumulated depreciation is only the depreciation for that first year of 230,313, which means that our carrying amount in the case of the outer structure is 2,179,687. So now we've also got to go and do an impairment test. Now, before we go and look at the impairment test, let us go and see what is the total carrying amount of this overall asset. Remember, we said a few weeks ago that when you do your PPE note for your financial statements, you are not going to disclose the components separately. You are only going to disclose the total of that overall asset. So you'll have a category of asset called bottling plant. Bottling plant. And then you'll say the bottling plant has a cost of 4,930,000 rands. It had depreciation expense for the year of 699,647, and its carrying amount is 4,230,000. And how do we get that? It is the total cost of that overall asset less the accumulated depreciation on the overall asset. So these separate components was just to make the depreciation calculation possible for us. Because if we didn't capitalize them separately, and if we did not calculate our depreciation on those components separately, it would have been a shambles, because they've got different useful lifetimes, they've got different costs, right? And each one is significant in its own. But when we disclose it in our financial statements, we are only going to disclose our categories of assets. So we might have motor vehicles, we might have office equipment, we might have, in this case, bottling plant, right? Bottling plant. And these are the totals, are the amounts that we are going to disclose. So, ladies and gentlemen, our first question here, when we are going to do an impairment test, as we know, that is the last part here. We've got to check whether the asset is impaired or not. Right. The first thing we've now got to do, maybe let's go one step back. If we do an impairment test, what do we compare with what? If you can perhaps I just want to see. I'm sure you all know this by now, but just to make sure, if we do an impairment test, what do we compare with what? What value do we compare with which other value during an impairment test? The carrying value with a recoverable amount. Thank you, Enrique. Spot on. Right, ladies and gentlemen. So it means we have to determine the carrying amount, or carrying value if you wish. And we've also got to determine the recoverable amount. So let's do the carrying value first, because we've already started. We've actually completed that. So we saw that the carrying amount, or carrying value, of this overall asset, which is our bottling plant, is an amount of 4,230,354 rands. Now we've got to compare that carrying amount with the recoverable amount. So let's see what they told us here in 1.5. They say test whether it should be impaired, as we know, if the value in use is 4,800,000 rands. So if we continue using it to make those or to produce those spring water bottles with spring water in it, obviously, then the value is estimated at 4.8 million, right? If we stop using it and we sell it, they say then we will be able to sell it after deducting any cost to sell it of 3,200,000. So which of those two are we going to, or are we allowed to use as our recoverable amount? The higher or the lower? Maybe that's the easiest to type. The higher, thank you, Enrique. Right, so we can use the higher of them. So the higher of those two figures is obviously the 4,800,000. So we get the benefit of the doubt that we can use the recoverable amount as the higher of those two values. So now if we go and do our impairment test, we see that we've got a carrying amount of 4,230,000. We've got a recoverable amount, so its true value for us, its maximum true value. In this case, if we keep on using it as we intended, its maximum true value for us is 4.8 million rands. So my question is, ladies and gentlemen, are we carrying an inflated value? Are we carrying pie in the sky? Yes or no? Are we carrying an imaginary balloon up there in the sky, a balloon figure, or are we carrying a realistic figure? We are not carrying pie in the sky, ladies and gentlemen. We are not carrying an inflated value, because, in actual fact, this plant could be, if you continue using it to bottle those spring water, it can produce future economic benefits estimated at 4,800,000 rands. Right, so that is what it is worth to us. So we are not carrying pie in the sky. So therefore, ladies and gentlemen, should we account for an impairment loss now? Yes or no? No, thank you, Enrique. Thank you. The others are now a little bit quieter, but anyway, I'm sure you are following with great focus. Right. So there we can now go and see. They say the carrying amount. There we go, 4,230,000, and it was copied over to that little table there. And they say the value in use of 4,800,000 is larger than the value, the fair value less cost to sell. So therefore, we are able to use the larger or the bigger of the two amounts as our carrying amount. As our recoverable amount. My apologies. So our recoverable amount is then calculated as 4.8 million. So therefore, there is no impairment loss because the recoverable amount actually exceeds the carrying amount. Right. Okay, ladies and gentlemen, that is that question. So hopefully everybody is now going to be able to allocate the cost. I'm just going to quickly go to the alternative method in a few minutes as well. But let us just pause there for a half a minute or more if necessary. Are there any questions from your side on this particular question? That's all good. Thank you, Enrique. All right, all good. So now let us just go back to question four, where the other method was used, so that we just go through that as well. Just going to stop sharing this. Ladies and gents, you must now just give me a minute or so to find the full question bank because I obviously created this question separately so that I can load it for you together with the memorandum later on. Question bank, there we go. So tomorrow I will just do another question on an asset exchange as well because that seems to the entries were done well, but I think the only little issue there was that some students did not know how to calculate the purchase price of the new asset. So we'll just go through that tomorrow again. Okay, we're just waiting for it to appear on your side. Why is it not coming up? There we go. Okay, there we go. Right, let me just make that a bit larger as well. So in this case, ladies and gentlemen, in the case of question four, and you do have the solution as well. So I'm not going to post it separately. We had a purchase price, we had import duties, we had administrative costs, and we had driver training. So what they are saying in this particular question is that we have got certain significant parts. Maybe we can just go through it again. Maybe some of you have already, but let us maybe just go through it slowly and surely, right? So they say the following costs were incurred on a specialized mining vehicle on the 1st of March 2006, right? So we now know our overall asset. What is the overall asset? It is a specialized mining vehicle, one of those huge ones that's about 20 feet high, right? Even the tires are more than 7 or 8 feet high. You don't know what feet is, probably more than about two or three, 2.5 meters. And then they say we had a purchase price of 3.5 million. We know that will form part of the cost. We also had import duties, so we've got to decide whether that's a directly attributable cost or not. We had administrative cost, and we had driver training. So let us maybe just discuss quickly, first of all, before we go to the rest of the information, which of those should be seen as a directly attributable cost. The purchase price we know will always be capitalized as part of the cost of the asset. Now, what about the import duties? Is the import duties a necessary cost? And the answer there is yes. We cannot, thank you, Henrik, as well. You confirm that it is a necessary cost, right? We cannot import that specialized mining vehicle unless we pay the import duties. Now, this may sound strange, ladies and gentlemen, but we must remember we must ask those two subsequent questions as well. Does paying the import duties change the condition of that specialized mining vehicle? Yes or no? Does it change the condition of the specialized mining vehicle? Or does it have any significant role in the condition? And the answer there is no, it doesn't change anything. It has no effect on the condition of that specialized mining vehicle. But now we have to ask the subsequent question. Does it play a significant role in the location of that specialized mining vehicle? And there the answer, and I know this sometimes sounds a little bit strange, but I'll do my best to expand on it. There the answer is actually yes. It is yes. It does play a significant role in the location of the asset. Because, ladies and gentlemen, if you do not pay the import duties, that specialized mining vehicle is going to be stuck and it is going to be retained by the customs official in the customs warehouse, right? You know, if it was loaded off a ship, because it's such a heavy and large item, it probably would have been transported by ship instead of plane. So doesn't really matter. The fact is, the customs that they've got a warehouse at the airport, but they've also got warehouses at the seaports, right? So what they would do once that specialized mining vehicle was loaded off from the ship or whatever vessel transported it, it would have gone to the customs warehouse, and customs will not release that item, that asset, unless you pay the import duties, right? Later on, at the end of the year, when we are going to do foreign exchange, you'll see we'll come back to this principle. When it comes to foreign exchange, we have different methods in which we calculate our cost when it comes to importing. But anyway, that is our last topic for this year. So that is a directly attributable cost. Now, what about the administrative cost, ladies and gentlemen? That you will see is also mentioned as a specific example in the notes, as well as in IAS 16. The administrative cost might be necessary, but in normal circumstances, it plays no role in either the location or the condition of the asset itself. It is just administrative cost. It is maybe uh, 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 um, printing the invoice or printing the labels. Let's say the labels or in this case, it's not a bottling plant. Uh, this could be getting the registration done, having the number plates made, those kinds of things, right? So those are written off as expenses. You're not going to capitalize the number plate expense, and you're not going to capitalize your registration cost and your license fees and those kinds of things, right? Because they are basically insignificant. Uh, and then the driver training, ladies and gentlemen, that might be a necessary cost. Otherwise, they're going to ruin that mining vehicle. So the drivers need to be trained, or they might even injure themselves if they are not properly trained. So it's a necessary cost. But once again, the driver training plays no role in the condition or location of the specialized mining vehicle, the asset itself. As we've said tongue in cheek a little bit earlier, it definitely does play a role in the condition of the staff, the drivers themselves, the people. But that is not the question. It must play, in order to qualify as a significant part for accounting purposes. It all relates. Does it have a significant influence? Does it play a significant role in the condition as well as the location of the asset? Not the drivers, not the staff operating the asset. Then, ladies and gentlemen, they say over and above the main body of the vehicle, the following significant parts were identified. So now we see we've got one significant part called the main body. We've now got a significant part that we refer to as the main body. So it means we're going to have a ledger account called specialized mining vehicle, colon, main body, colon, cost. And then we've identified two other significant parts, namely the tires, which are huge and very expensive in their own right. So we're going to have a ledger account that we call specialized mining vehicle, colon, tires, colon, cost. And we also have a significant part which we call the engine. Once again, ladies and gentlemen, the reasons being that they are significant in value in their own right. They can be replaced separately. That's our second little box that we tick. And thirdly, each of them has got a different useful life than the other. The tires, for instance, 3 years, the engine, for instance, 4 years, and the main body, as we'll see in the next paragraph, 15 years. Right, so each has got a different useful lifetime. Anyway, we're not going to be able to do the whole question. I just want to do the allocation of that import duties part. So, for that reason, ladies and gentlemen, they give us the next sentence here. They say relevant costs, and if they say relevant, it means those costs that must be capitalized, which in turn means our directly attributable cost, which in this case was only the import duties. They say the relevant costs have to be allocated amongst parts, significant parts, in proportion to the cost or in proportion to the purchase price, we could have said there, in proportion to the purchase price. So now we know that it is the 240,000 rands that we have to go and allocate over those three main parts, those three components. And we also know that the method that the accountant has decided upon is to allocate it in proportion or proportionally, if you wish, right? Means the same thing, proportionally or in proportion to the purchase price of the part. So let us go and see how we do that, ladies and gentlemen. So we now, first of all, have our purchase price, right? We have the purchase price of the tires, which we saw was 400,000 there. The purchase price of the engine, which was 850,000 there. We saw that the total purchase price was 3.5 million, and that includes all the components. They say here the cost of these parts here at the bottom below, is included in the purchase price of 3.5 million, right? So those amounts, the 400,000 and the 850,000, is included in the 3.5 million. So our total purchase price was 3.5 million. So if we go down to our little table here, we see that the total is 3.5 million. So what is therefore the deemed cost of the main body? It will be the total purchase price of 3.5 million, less the 400,000 that we deem to be the cost of the tires, less the 850,000 that we deem the cost to be the engine, and that then gives us the 2,250,000, which we now regard as the cost of the main body component, right? The vehicle itself, besides its engine and besides the tires. Now that 240,000, there's the directly attributable cost. We now have to go and allocate proportionally, ladies and gentlemen. So what that means is the higher the purchase price, the more cost must be allocated to it. The lower the purchase price, the less cost must be allocated to it. So how do we do a proportional allocation? We have to get a little formula for us. So what we say is below the line is going to be our total cost for the whole overall asset of 3,500,000. We've just cut off equal numbers of zeros on each side here. So that will be 3,500,000. And then above the line in our little formula, we'll have the purchase price of the tires. So this means our formula is 400,000 Rand over 3,500,000 rands, which translate to that if you chop off 1, 2, 3, 4 zeros on above and below the line, which you can do in mathematics, as you know, and then we multiply that by the actual cost that needs to be allocated. So in this case, it's going to be 40 or 400,000 if you wish over 3,500,000. So it's that figure above the line over that figure below the line multiplied by the cost that you want to go and allocate. So that gives us 27,420. If I remember, there's also a little rounding off uh, 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 involved there. Right. In the case of the engine, ladies and gentlemen, we do exactly the same. So below the line, we'll have our total cost of 3,500,000, but above the line, we'll now have the purchase price of the engine. So our little formula is going to be, if we are going to allocate it proportionally, is going to be that 850,000 Rand over 3,500,000 rands. And here we've just chopped off 4 zeros above the line and 4 zeros below the line, which we can do in mathematics, like we said. And we multiply that by the cost that needs to be allocated, right? So 85 over 350 multiplied by 240,000 gives us 58,286 Rand. The same now with the main body component, ladies and gentlemen. So now we know above the line, we're going to have 2,250,000. In other words, the purchase price that we deem for the main body over the total purchase price of the overall asset of 3.5 million. So that translates to 225 over 350, or if you don't want to chop off the zeros, then you'll take 2,250,000 over 3,500,000 multiplied by the actual cost that you want to go and allocate of 240,000, and that then gives you the 154,286 rands. Okay, so that is the method if you want to go and allocate the various directly attributable costs proportionally to the various significant parts or significant components of that asset. Then just this little matter here, they also mentioned later on there, where was it? The vehicle must be certified as safe for mining purposes every 4 years. So possibly we could have capitalized it as part of the cost of the engine, but that doesn't really make sense. So we would rather capitalize that certificate as a separate significant part. So it was obtained at a cost of 11,000 rands. Now, okay, I don't want to go into this debate, ladies and gentlemen, but there is possibly a debate. If you do not consider that 11,000 rands to be a significant value, and to be honest, if I'm an accountant in practice, which I actually am, but I mean, if I'd been the accountant of this particular business, my judgment would have told me that is not a significant amount. So personally, I would have written that off as an expense. Had that been, let's say, what is the total value of this asset? 3.5 million. Had that been 110,000, different story. Different story. If that had been 110,000, then it is quite material in relation to the total value of the asset. So in that case, I would have recognized the 110,000 as a separate component and treat it as a significant part so that it can be written off over the useful lifetime of that specific safety certificate. We see that the safety certificate has a useful lifetime of 4 years. Okay, right, ladies and gents. Now let's pause there. Are there any questions from your side? Now is your opportunity. You can now ask about this question or the previous one or any other question in the question bank or any other example. Have you got any questions? You can ask them in person or you can type it in the chat if you wish. Choice is yours. All good? All good. Thank you, Enrique. Thank you, students, for attending. I appreciate that. Tomorrow, when we have our online class, it's probably not even going to be the full length. We'll probably only use about half or so of it. We'll see. So this time you might get a proper break. I shouldn't have said that. Now something's going to come up, and we're going to spend more time than I thought. But anyway, the idea is just to complete that question that we spoke about last time, the one where we had to de-recognize a certain part and recognize a new part. In other words, a replacement of a part. And like I said, we're going to probably do question two from the question, not question two, yeah, question two. Question two from the question bank, which deals with an asset exchange, just to explain really. Uh, like I say, most students had the entries correct. It was really just a question of how to determine the purchase price of the asset that you are acquiring and that you are paying for with an old asset and possibly cash as well. Question one doesn't involve cash, so it's too straightforward. But I think question two does involve cash, so it is a better example to work through. But anyway, that's for tomorrow. So if there are no questions and if you are all good, then I wish you a lovely afternoon. Enjoy the rest of your classes. Enjoy the rest of the day. And we'll speak again tomorrow. Thank you. Bye bye.